Drenard Trust here. Let's talk about 4 Fidelity Index Funds that will quadruple your money. Number 1, we have Fidelity 500 Index Fund. This fund tracks the S&P 500 index, offering exposure to 500 of the largest U.S. companies across various industries with a remarkably low expense ratio of 0.015%. And FXAIX is an excellent core holding for long-term investors seeking steady growth, right? Its broad diversification and historical performance make it a solid choice for those looking to build wealth over time. It has also a strong historical performance, right? FXAIX has demonstrated impressive returns over various time periods. Case in point, the 1-year return of 25.43%, the 3-year average annual return of 8.85%, the 5-year average annual return of 14.27%, the 10-year average annual return of 13.07%. These robust historical returns showcase the fund's ability to generate significant growth over time. It also has a low expense ratio with an expense ratio of just 0.015%, right? Is one of the most cost-effective ways to invest in the US stock market. This low fee structure means more of your investment goes towards actual market returns rather than management costs, right? There's also broad market exposure. FXAIX tracks, again, the S&P 500 index, providing exposure. 500 publicly traded companies. I don't think it really gets that bigger than that, right? It's a very broad diversification. This fund is managed by Fidelity, a reputable investment firm with a strong track record. This ensures that the fund closely tracks, its benchmark index and maintains its low cost structure. Next, we have Fidelity Total Market Index Fund, FSKAX, right, which provides comprehensive exposure to the total US stock market, including large, mid, and small cap companies, right? So this broad diversification can potentially lead to higher returns, albeit with slightly more volatility, I gotta be honest, due to the inclusion of smaller companies. The fund's low expense ratio and historical performance make it an attractive option for investors seeking total market exposure, right? There's the broad market exposure, right? The FSKAX, this stock, is designed to generate returns on par with the broad United States stock market by investing at least 80% of its assets into the Dow Jones Total Stock Market Index. This provides investors with exposure to approximately 3,700 companies listed on the US stock exchanges, offering comprehensive market, coverage of the US equity market, right? So there's also strong historical performance. It has demonstrated solid returns over time. For the year-to-date period ending November 30th, 2024, it delivered a total return of 27.72%. Over longer periods, right, it has also shown consistent performance with a 5-year return of 15.15% and a 10-year return of 12.84%, low expense ratio with an expense ratio of just 0.015%. FSKAX is one of the most cost-effective options for investors looking to gain broad market exposure. So this low fee structure helps maximize returns over time. Diversification: the fund's portfolio is well diversified across various sectors and company sizes, ranging from small cap, medium cap, you name it, right? Apple and Microsoft, giants like Apple and Microsoft to smaller emerging businesses, right? So I wouldn't, you know what I mean? Next, we have Fidelity Zero Large Cap Index, FNILX, which is part of Fidelity Zero Fee Fund lineup. FNILX tracks the Fidelity US Large Cap Index, which is very similar to the S&P 500. With a 0% expense ratio, this fund allows investors to keep more of their returns. Its 5-year annualized return of 14.8% demonstrates its potential for strong growth. Zero expense ratio is a key. It charges no management fees, allowing investors to keep more of their returns. This market, it just makes it one of the most cost-effective options for gaining exposure to large cap US stocks. It has a strong performance as well, right? The fund has demonstrated solid returns with a 5-year annualized return of 14.8%. In 2024, it achieved a return of 27.4%, ranking in the top 6.15 of its category. The broad market exposure, FNILX, tracks the Fidelity US Large Cap Index, which is designed to reflect the performance of the top 500 large cap US companies. This provides diversified exposure to established US businesses, right? Positive forecast is also something that is accused with this kind of stock. Analysts project an average price target of $24.36 for the FNILX in 2025, representing a potential 13.36% increase from its current price. Simplicity also, right? As a set and forget fund, FNILX offers a straightforward investment option for those seeking long-term growth without active management. Okay, there's also that low turnover. With a turnover rate of just 5%, FNILX minimizes trading fees and potential tax implication. Lastly, we have the Fidelity MSCI Information Technology, the Index ETF, FTEC, for investors looking to capitalize on the technology sector's growth potential. FTEC offers targeted exposure to information technology companies. So, while more sector specific and potentially more volatile than broad market funds, technology has been a significant driver of market returns in recent years. So in regards to strong performance, FTEC has demonstrated impressive returns with a 37.01% total return, over the last 12 months. The fund has consistently outperformed broader market indexes with a 5-year total return of 189.52% and a 10-year total return of 537.31%. The sector exposure, FTEC provides focused exposure to the information technology sector, which has been a key driver of market growth. The fund tracks the MSCI USA IMI Information Technology Index, representing the performance of the US information technology sector. There is a low expense ratio, right? The annual expense ratio of, just 0.08%. FTEC is one of, the least expensive ETFs in its category, allowing investors to keep more of their returns. Diversification, while concentrated in the tech sector, FTEC holds 296 stocks, providing some level of diversification within the industry. Top holdings, the fund includes major tech giants, Nvidia, Microsoft, Apple, among its top holdings, giving investors exposure to industry leaders. In regard to dividend yield, FTEC offers a modest dividend yield of 0.49%, providing some income potential alongside capital appreciation. Market capitalization, with over $13 billion in assets under management, FTEC is a sizable and liquid ETF, which can be important for ease of trading. It has a positive momentum, with the FTEC up 1.82% year to date as of the latest data. If you enjoyed this video, hit that subscribe button and the like button. I appreciate your viewership. Stay safe and see you on the next video.